We'll start.
Perfect. Okay. Welcome to everyone this Saturday morning. It's a privilege to present something we called as a wealth-wise webinar. This is Nirmal Jain. I also have Prithvish, my co-founder at HappyWise, presenting this, as well as Bharat, our core team member. Uh, it's a very interesting topic we have lined up for our November edition, right? A lot of times we hear about Amrit Kal in Bharat, or what's going up. We all see progress every day. We see what we were 5 years, 10 years, 15 years from now, how we've upgraded to many things. Obviously, in cities, in tier two cities, in proper towns and villages as well. Everybody is feeling that growth curve in India, which is so exciting for all of us. Right? So, what's very important today, what we thought as a subject or the research we do at HappyWise, we've always seen where we can take our clients in terms of this growth, how we all can be part of this growth. What does it mean for all of us? All right. So why would we always think about investing in a place where there is more growth, right? We all know that if we invest in India, this feeling is very common to each and every one of us, that we invest in India's growth story, we stand to gain in the future, right? Also, we've been heavy advocates of making better alpha generator, higher alpha generated returns in terms of compounding. Okay. Now, if this combination has to be struck in the right balance, we'll have to understand which growth sectors or which sectors are there to grow sometimes higher than the other sectors, right? So this is where the alpha can be generated. That is where we have today's very, very interesting session on where India's wealth will grow the most by 2030 or thereabouts. Okay, let's take this presentation forward. All right. So one very interesting snapshot, although we see these buildings, we see high rises, we feel very excited what's in store for us. So India's unstoppable growth story. Let's look at some numbers, right? So what is the momentum we are currently in? We all know that something which grows and then momentum adds, we call it compounding, snowballing effect. All these things looks very pertinent or doable now for India, right? So in the current pace, although I don't know if you've seen yesterday's headlines, it talks about India's GDP, which has grown substantially over the last quarter, right? The last quarter has been one of the record quarters in terms of GDP. So this is happening again and again. Numbers are tumbling. We are making better numbers than earlier. So what? How does it project in the future? If you see by 2030, we are destined to be the third largest economy of the world, right? Which is great news, proud news for all of us. We are all part of it. So, what are we going to surpass? We're going to surpass Germany and Japan, right? Which we've always looked up to the developed world. Now we are surpassing that as a economy, right? So, GDP growth is averaging 6 to 7% annually. So, we are outpacing the major global economies. They are growing at a far lesser pace than us. If that is happening, and with the current standing we have, we are going to be third largest economy by 2030. That's great news. Now, how is it happening? If you have to think, we are a middle class country. So our 600 million plus consumers are there. Now they are rising. Obviously, when they are rising in terms of income, their spending is rising. So there's unprecedented domestic demand. Now, if there is unprecedented domestic demand and we are hitting on the right sectors, on the right, we are fulfilling global demand as well. So which are these sectors which will be top of the frame where the growth rates can be higher? Now, if the GDP growth at 6-7% and your portfolio grows at 6-7%, that's good. But then there are sectors which will grow at much higher levels. We've seen that in the last 5-10 years. So this is what today we are set to discover with the research we did, with the numbers we found, with a lot of number crunching. Prithvish and our team completely got to a stage where we think these can be the top sectors we should always be invested in currently. Let's look at them, right? Let's look at the next slide. Okay, so here this is now. although this looks, a simple slide, but this can make a, huge difference in your investment journey, in your financial freedom, in your wealth creation journey. So the five wealth building sectors, as per our research numbers plus the potential which can happen, will substantiate these five in the next slides. Okay. So let's look at these the five sectors. The first one we are talking about is the capital markets. Okay. With consumption going up, everything going great, retail investor search, we think capital market, although we are not putting them in chronological order where we're saying one, two, three, four, five, but we're saying these five sectors. So capital markets, one, due to retail investor search. The second one we're going to talk about today is the banking and financial sector services, right? Because there's widespread digital transformation, right? We know scale can happen through this. So with consumption going up, and digital transformation, I think the banking and financial services too. Three, we talk about defense, right? India has always been on the cusp of having great defense mechanism or budgets. This is going to increase. Plus, the Make in India, what we all talk about is we are going to become a powerhouse for all global economies where we are able to supply defense systems, right? So that research is what we've done, and you'll see in the next slides. So three is defense. Four, we're going to talk about e-commerce and digital. Uh, Easier, theoretically, practically, we're seeing it every day. Consumption explosion, how things are adding up, things like 5-minute deliveries, things like, rapid growth in every aspect of consumption through e-commerce, digitalization. The bigger players, people who are having the digital presence, are able to ramp up record volumes quarter after quarter, month after year, month after month, and they were burning cash, and a lot of them are now actually cash positive. Plus, they are looking at profitability also. So this can add up and snowball into huge numbers. We'll see that in our next slides. Also, the fifth sector, although talking about very boring things like manufacturing, manufacturing in India has been done from quite some time, but then we are going to become a production powerhouse with what data we've seen, right? The production powerhouse for the world. All this time we know China to be one, right? But then many things are now tilting towards India, where we see that this growth can become maximum. So let's jump into this and see where today. Also, on a side, before we jump into the next slide, in this webinar, I promise you that you will not only get theoretical information in the last slides, which will follow after these. We've also pinned down to these sectors, which are the stocks or which are the mutual funds, which are actually destined to, you can invest in those and get maximum benefits. So hang on till the end so that you can see that, not only the observations, not only the data could be boring on a Saturday morning, but then you will look at actual the action plan, what you could do, or what Team Happy Wise is doing for its clients in terms of making you achieve results out of these analysis. Get to the next slide, please. All right. Capital markets. We all know capital markets to be like stock exchanges, indexes, but capital markets involves a lot of things because there is a lot of rising retail population. People like many of you on this call, plus what we've seen, me and Prithvish, over the past 15 to 17 years of our journey in financial management, the rising retail participation. Every month we see SIP data, we see DMAT data, everything is going to record highs, right? So we have over 140 million DMAT accounts open in India as Indians now. It's a huge number. Mainly more than the huge number, you see the jump which is happening day by day, right? Also, if you see the market cap explosion, yesterday also we were at all-time highs, right, in terms of stock market or the Nifty. So Indian market cap projected to reach $10 trillion by 2030. Although 10 trillion, sometimes we are not able to imagine what it is. It's the total market capitalization means the total value at the stock market currently, right? The price into the number of shares which are traded into the market. So which is dollar third, and currently we sit at around 3.3 millions, right? So trillions. So it's about we'll be doing 3x of that within 2030, which is a fair clip. Just understand this, tripling in 5 years. if these projections are right and the numbers will go right, which looks like very likely, so we should be in equity is a given, right? So there's no getting away from this. If somebody is out of equity and just into debt or just into real estate, it's high time that there is equity exposure so you don't miss the bus of rapid expansion in your portfolio as well. So tripling in 3 years seems very likely. So that's why the capital markets, everybody is going to get it, more and more people, more plus the exposures are going to go up because the results are there for you to see, right? There is transparency all around. All mutual fund portfolios are around 15-20% CAGR if you have invested 3 to 5 years plus from now. Even if you have invested 1.5 year, although the markets have not done much, most of our happy eyes portfolios are at 10% plus. So these are numbers which are beating everything. It's beating the debt market a lot of times, the real estate market, which people have a sort of picture that it's doing great. But then equity has beaten all of this, right? We have data on that. Also, there is a if you see the third point, it talks about shift from physical assets to financial instruments. Okay, all this time, just picture this in your mind. You, your friends, your families, everyone had a lot of physical assets, real estate, gold, but then people are moving towards financial assets. Now, this will obviously accelerate wealth creation and obviously accelerate this sector, capital markets, right? So the capital market as an investment has to be a part of your portfolio, right? So we look at the next segment now. So one, you've seen the capital markets now. Look at number two.
Nirmal, just to add on a couple of data
Yeah,
points here.
sure.
So, one is, yeah, Nirmal spoke about 140 million demat accounts. So these are individual accounts. So if you consider, people having multiple accounts, we have about 19 to 20 crore, that is almost 200 million demat accounts right now. And comparing this with 2014, we just had about 2.3 crore demat accounts. So that is one when we talk about inclusion in market, retail investors investing much more than what they were doing earlier. Second data point I want to add here is with respect to the mutual funds. So mutual funds, currently we have close to 80 lakh crore of AUM as on last month. And here again, you all know, I mean, with all your support, we have been consistently, our retail investors have been investing almost 29,000 crores of monthly SIPs. So the monthly SIP is close to 29,000 crores now. And one more point to add, we have huge IPOs coming in from, you have seen many IPOs in the recent years. Again, to compare that, we just had about 12,000 crores of total market, funding raised during 2014, and it is almost 10x now. We have almost 1.2 lakh crore
Hmm.
of, funds raised this year. Yes,
Wow.
Nirmal.
I mean, amazing data points. If you think about it, I mean, the numbers were told so easily by Prithvish, but then crazy numbers if you see the growth there, and it points clearly towards capital markets explosion going forward. Yeah,
Yeah, and also the GDP, currently we stand at around 4.3 trillion.
4.3, correct.
And yeah, and I think by 2047, the Amrit Kal, what we are talking about, we should, even if we have the conservative figures at 7% GDP, we should be able to hit close to 30 trillions by 2047.
Perfect. Right.
Yeah.
So nothing more clearer than for you to understand how the capital market explosion will happen. Right. Let's go to the next theme. All right, banking and financial services, a little boring. Everyone thinks that banking, financial services, everybody talks about could be some private banks, public banks, but look at these figures. We talk about credit expansion, right? Bank lending is growing at 15% annually. I don't know if you've read anything about this. So, because the credit penetration is going really great. Now, this is happening due to many aspects. The fintech boom is happening. So, many you see unicorns are coming in. There are 87 fintech uniforms, unicorns now. So they are revolutionizing everything right from payments, lending, wealth management, you name it, and it's been revolutionized through digital dominance. Now, if this is happening at this pace, and I think this is nothing, this can be sustained very easily. Is what I can straight away tell you. No, this can be sustained for next 5 to 7 years. We are heading for really great numbers in this sector, right? Plus, they have, the Indian banking and financial services is governed well, right? They have a good asset base. It's sometimes not very, it's quite dependable. Not, sometimes not like the West. We've heard about in the West, these services or these segments fail very easily when there are issues in the economy. But in India, that has not happened, and that's a very good sign. Also, if you see the insurance penetration, so this is penetration far and wide, right? So coverage is expanding rapidly from low base, creating massive opportunities in life and health insurance. Now, life and health insurance is great, has tremendous traction because uh, there is more education, there is more understanding that these are basics which are required. Although, because for example, health insurance, their bills are skyrocketing to an extent where it's become like mandatory to have health insurance. Although the penetration is still low, so there's a lot of growth left, which we can see which will happen. So digital dominance is going to give this sector tremendous, boom. We'll see, as I said, in the end, where which are the top picks in terms of this sector also, right? So we'll jump to the next sector now. This was number two, banking and financial sector. Let's look at what we have on number three. Yeah. Right. Nice picture. Defense manufacturing takes flight. So if you see there's a flight there, there's a defense, these are all defense sector. So what is happening in the defense sector? This was one sector Prithvish gave us a lot of light on. We are talking about the rising defense budget. If you look at allocating across $100 billion by 2030 with increased focus on domestic procurement. What was happening in the past with our technology, with our know-how, there was a lot of import which was happening, right? Now, this import is slowly getting transferred into Make in India. If you see the second point, also, this will lead to export growth. So it's like from negative, we are going positive in terms of production, in terms of manufacturing, defense equipment. Uh, Although things are getting really, the new things coming in defense as in any technology or sector. So India is really destined to become, you're seeing this, the third point, it talks about defense exports surging to $5 billion, positioning India as a global arms supplier. Uh, Now, there are countries like US, Russia, which primarily grew due, in their heyday due to the manufacturing of defense equipment. Now, this is going to slowly shift towards China and India as well. When this happens, because if you can get economies of scale and the power of uh, us being cheaper and on the same page in terms of the best technology, this is bound to happen very easily if we understand demand and supply. What if our prices are equivalent or lesser to the US defense stocks or the Russian fleet, what they have in terms of any equipment? So this is going to definitely happen, and we see defense as a sector which can grow manifold times due to these simple, understandable steps. So if you see the number, Nirbhar Bharat we speak about, so that is driving 70% plus indigenous defense production target by decade end. So we see at 2030 as a good target. So next 5 years, this segment is bound to give us very good results. All right. So this was number three. Let's look at the fourth sector.
Yeah, just to
Yeah,
add a few
Piyush has one point. Sure.
pointers there also. I just want to add few numbers to what Nirmal is talking about. See, all this data crunching we have been doing, and we this is how we have been able to find out which are those five rising sectors which we should be investing in, right? So here, when we talk about defense, you all know, I mean, Indian government is giving a lot of thrust on the defense. So just to give you a few data points, one, the last year's defense production in India has hit a record high of 1.5 lakh crores. And in fact, exports compared to our 686 crores, which was in 2014. Currently, we have done 23,600 crores. So that's a huge surge. And in fact, we are looking at crossing 50,000 crores in exports in the next 3 years. 2028 or by 2030 is the target, what they have given to cross exports of more than 50,000 crores. And of course, private sector was not having a major market share. It was all dominated by government companies in defense. But now we have almost 23% of the total defense manufacturing, uh, contributed by the private companies. Yeah, so these were some
Hmm.
pointers which I just wanted to highlight.
I mean, it'd be really great pride to see, say, make made in India jet lying in the US Army very shortly. I think that day will come very shortly. Great. Let's look at the next sector. All right. This we all as consumers experience every day now. So the consumption wave, as we said, the Indian middle class is increasing, the spending power is increasing. We all know that. I mean, this is spoken about every day. So we see which sector is going to actually sequentially grow. That is the e-commerce sector. Now, the digital consumption, although a lot of our normal mom and pop cafe places, joints, everybody's using it. But then who's using e-commerce to the tilt. No, I think they have a great growth ahead of them. So we see some numbers we've spoken about. The market is transforming as for this. So India's e-commerce market is set to reach $350 billion by 2030. Oh, these are all substantial numbers. So, driven by unprecedented digital adoption and innovative business models. We've seen many models, 5-minute delivery, 10-minute delivery. We've seen eat out. We've seen wherever you are, the delivery, delivery based on anywhere from India, you can get anything to your doorstep. So, quick commerce and D2C brands are rewriting the rules of retail. I mean, innovation is something which is widespread every day. You feel, wow, this is great innovation today. But when you get up tomorrow, there's one more innovation where you feel, wow, this is coming in again. It's happening again and again. So, sky is the limit for innovation in e-commerce and the digital platform. So, while tier 2 and tier 3 cities emerge as the next growth frontier, although we always show pictures of cities, bustling traffic and huge high rises, this is what we miss, right? So, uh, if you see from 2025 to 2030, I think tier 2 and tier 3, what growth they will give these platforms is something we can't imagine, or the numbers will be surprising for us, right? So, these numbers will now translate to these segments or sectors hitting great numbers in terms of their valuation. Okay, so e-commerce is something we are really bullish upon, and I think we all should invest in the best players who can take advantage of the next 5 years of tier 2, tier 3 growth, especially. So, which are the segments there? We'll see in the on the slides in the end. Let's go to the next slide, please, Bharat. All right, manufacturing. So India slowly is becoming the production powerhouse. We've seen this not only in the potential, we're just not talking theory here. The numbers are there, the growth numbers are there, the sustainability there. We've seen a lot of new frontiers in terms of export markets, not only the consumption which is happening in India. The consumption, yes, that's a big story in the next 5 years. Although all these sectors are interrelated, but we know pure plays in manufacturing who are actually getting the best economies to of scale, right? Because we know that higher production leads to lower costing, economies of scale on all aspects kick in. So if you see, there are something called as a PLI scheme, right? There are production linked incentives worth 2 lakh crores across for 14 sectors, boosting manufacturing competitiveness. What has happened and what Indian government has seen is, we all know we have uh, the best labor and at a fairly good price. And the government now has identified this as a major growth engine where a lot of such schemes are rolled out and incentives are given. So this is driving things forward in a big way. Also, the global supply chain shift. Now, China uh, plus their strategy positioning in India as alternative manufacturing hub. Now, all these years, China grew really great in the last decade or so, or decade and a half. Now, they were the number one production hub in the world. Now, that is shifting plus adding up. China is obviously there, but then it's India is now becoming second to none in terms of where we can reach, especially in electronics, pharma. These uh, because the technical know-how plus the quality of products what India is rolling out is making India a global supply hub as well. So this can boom substantially in the next 5 years is what we know. And also, as we've spoken, the rising domestic demand. Now, this cannot be ruled out at all, right? The middle class is consuming more cars, more phones, more appliances, driving local production scale. Everything is hitting the right notes in terms of. So, if you see, if I couple these three aspects, right, why we highlighted these three, we all know rising domestic demand, the government incentive and push to make things better for all manufacturers in terms of production units, in terms of labor welfare. Also looking at the supply chain which is shifting from China to India. This is happening in real time as we speak, right? A lot of production houses are who are based in China have their additional unit in India, or there are some people who are shifting entirely to India as well. So this is happening at a level, unprecedented level, which we can't imagine, right? The numbers are there, the schemes are there, the government support is there, and obviously the manpower is there in India. So this is the sector I think we should look at very closely and stay invested or start investing in, right? So let's look at the inferences out of this. Please go to the next slide, please. Right. So this is what we were promising, right? The inference or the result of all of this. Today, we've always been proud to give action-based solution to our clients at HappyWise. Now, if you see the action points out of all of this, if there is enough data points and understanding that yes, this is where I need to be in the next 5 years' time. How do I get there? How do I, get into these sectors? Which are the best bets in terms of stocks or mutual funds where I can invest my hard-earned money and actually make extra alpha returns? Because see, the plan could be there, the conviction could be there, but if the execution is not in the right direction, plus there is no, a lot of times we talk about review of the portfolio. So if there's no review of that, then actually it's of no use. So let's look at these five segments and where we can get into this. So let's go to capital markets. We spoke about capital markets and its potentials. So look at the stocks we've lined up. See, these are not necessarily just the only stocks we should look at, right? That's the disclaimer from our side. We found that these few of these listed can be a good play going forward, subject to a lot of things like review, right? As we review our portfolio every 6 months at HappyWise, we do it for all our clients. This is what needs to be done by everyone, right? It can't be the best for the next 5 years. There could be some shift. There could be additional stocks and mutual funds also. So if you look at stocks in the capital market segments, what we've highlighted here, HDFC AMC, right? HDFC, which is a mutual fund. So the AMC is a mutual fund company. AMCs are doing really great because we've seen so many mobilizations. We spoke about SIP editions. Everything is happening in this sector. And HDFC AMC has best processes and systems, we think, and the valuation looks fair. Also, stocks, there is BSE, which is listed, Bombay Stock Exchange, that is. So CDSL is one more player who is, keeper of all the demat accounts, all those things. So as the numbers increase, they are directly proportional to the growth of these stocks, is what we feel. If I'm looking at doing a indirect investments, I do it through mutual funds, right? A mutual fund might have a good basket of all of this. So the best part today, we have mutual funds which are curated towards these baskets. Or if I'm looking at capital market basket, I can look at Tata Nifty Capital Market Index Fund. Okay. And I can look at Motilal Oswal Nifty Capital Market Fund. Okay, so these two funds are, if you look at the Tata Nifty fund, they have a capital market index. We have it in India, so they invest the entire corpus in the index at the same proportion. So the correlation is the same. I can straight away hit into that, invest my money into that, and gain from this sector's growth. The second one also is similar. So I can choose between any of the AMC, Tata or Motilal, and get into this sector, which is capital market. The second one we have is banking and financial sector. Again, we've highlighted HDFC Bank, a very strong bank, HDFC, ICICI. These two banks we think are destined to the best. They have the best processes, they have best manpower, and I think they're very innovative in what they do. So they can uh, take you to the prices from here can go to great levels. Also, Muthoot Finance, right? Muthoot Finance mainly into gold loan and many such aspects, and they have very good governing principles also. So you can look at these stocks. In mutual funds, again, which directly invest to these sectors, SBI Banking and Financial Services Fund, one of the funds we've been investing with for our clients over the past many years. Also, the Kotak Banking and Financial Services Fund, managed very well, have very good fund managers. So you can look at these mutual funds. Looking at defense, uh, as Prithvish put it, there are a lot of private players as well now, right? Which is a very good sign and very important point. Look at these stocks, BEL, HAL. We know these names. Uh, the performance has been very good lately as well. So, but I think still much more to play out, much more to catch up in terms of growth they can get. And also MTAR Tech. MTAR Tech also is doing a great job in terms of defense. Which are the mutual funds which can be on that on the same page as defense? You can take as a sectoral bet. So Motilal Oswal Nifty India Defense Index Fund. So there's an index on defense. They straight away have a mirror investment, so you can get exposure to all the stocks in the index there. Also, the Aditya Birla Defense Index Fund. So these two funds will give you straight away direct ownership of defense stocks, right? So if I want to play the defense theme for the next 5 years, I can either look at individual stocks or straight away go mutual funds and just rest assured that whatever growth is there in that sector gets translated to my wealth creation journey, right? Uh, Also looking at e-commerce and digital, two players we've locked in. There is Bharti Airtel and Infosys, very old players. We all know much about them, and they've been always part of India growth story. Right? They've been forefronting that. The mutual funds which have direct exposure to e-commerce and digital sector, HDFC Nifty India Digital Index Fund, also the Motilal Oswal Digital India Fund. So these can be straight away invested into to get exposure to this sector. Manufacturing, many stocks in manufacturing you would assume. Few we've just listed down two here. I mean, you can get in touch with us later if you need a bigger basket on them or on any of the sector. Look at we have Maruti Suzuki and Reliance Industries. Although Reliance Industries is a huge conglomerate, but then I mean they are a forefront of manufacturing as well. Also, the mutual funds, if you see, is ICC Prudential Manufacturing Fund and the Motilal Oswal Manufacturing Fund. Now, these funds directly invest into only the manufacturing sector and give you direct exposure to the way ahead there. So, in a nutshell, we just put across this slide so that you get a fair understanding if you want to take action on this, where you should go on Monday and invest into. Right. So, this you can do this immediately. Right. Okay. We have one more slide before we complete and jump into any questions. Yeah. Hmm. So we've covered the why, what, how. We also look at what is in it for you. Right? See, if long-term themes, the equity opportunity and the sector allocation, if I do it properly, what happens to your overall portfolio? Right. So we've told you that India offers multi-decade structural growth. Right. We are in a phase where we think last 5-10 years have been really good, 10-15 years, and this should be there till minimum of 2047 when we spoke about Atmanirbhar Bharat and Amrit Kar and all those things. So if you look at there are you need to be cyclical. There are cyclical opportunities. There are demographics. There is digitalization. There is domestic consumption. Right. So all this put together, if I can channelize my money, I can create the compounding returns. How am I going to do that? So sectoral allocation. Now, how should I do my sectoral allocation is one more thing. So I need to balance between established leaders and emerging players. Right? We speak about how I need to mix my investments because I need to take care of my risk also. I'm just not talking about return. So if say defense sector or manufacturing looks really good, I can't allocate 20-30% of my portfolio right there. Right? I need to understand the risks involved as well. So here's one more disclaimer. We need to understand that we can't go all in, right? Whatever happens today. We need to be proper in our asset allocation and balance between the established leaders and emerging players. So emerging, the established leaders give us the right sort of growth in that sector, and the emerging players give us that extra alpha, right? So everything needs to be balanced in that way. So the equity opportunities in India, we think and we discuss this every day with proper numbers, is 12 to percent annualized return, 12 to 15% annualized returns through 2030. So time in the market will always beat the timing for your wealth creation. So uh, having the getting into the right sectors in right proportions, balancing between established leaders and emerging players, and having the right allocation throughout is of paramount importance. And I think the wealth creation journey can be a very safe one, an enjoyable one. That's what we want to achieve through proper, allocation methods. So this is more about, to sum up our presentation. I think, Prithvish, if you have few words on
I mean, you have really summed it quite well. One thing what I want to add here is, see, sectors and themes can also be cyclical. So, when we try to enter these themes, we should also make sure we have the right exit strategies, right? So, we have been talking about long-term investments in these sectors, but like I said, because these are cyclicals, we have also have to make sure we have the right exit strategies. So that is one point I just wanted to add to what you said, Nirmal. So
that.
we will be happy to take questions. So any question on any of the topics
You
which we
can
spoke
uh,
about.
you can type in your questions and send it now or also later, and we'll be really
Yeah.
happy to help. But let us know if you get any question like that.
There is one query, Prithvish and Nirmal.
Sure.
Yeah,
Yeah.
please go ahead.
Please go ahead.
Hi.
Yeah, how will the political party influence this defense and manufacturing sector?
Uh, it's a very, very good question. So, see, manufacturing has been given a lot of thrust with the current NDA government and from the last three continuous terms. So, from 2014, it has been given a lot of thrust. But defense is one sector which, irrespective of whichever government comes in, will get a good amount of investments to that. So even before the current government came in, there was a lot of thrust to defense sector, though it was not in terms of marketing, I mean production in India. So there was quite a bit of allocation made from the budget towards defense. So defense is going to be having no impact irrespective of whichever political party coming into play is what we feel.
The one thing to add to that very quickly, it's very clear in my mind, something which has started in is so well, it's very difficult to stop that, especially you see in the
Right.
manufacturing and the defense sector. Because there's common belief that if Congress comes in or some other party comes in, it could become slower. And I don't think so that will happen, at least in these, or there could be a little bit jerks here and there. But I think what is set in motion and it is going so fast, it will snowball automatically, is what I'm thinking.
Yeah. So what might happen, in fact, is probably some shift may happen from individual companies where some parties may be favoring some individual companies, but not as a sector, there should be impact, is what we feel.
Does that answer your question, Karthik?
Yeah, thanks, Nirmal and Pritesh.
Great.
Any other questions?
Yeah.
Well, if you have anything on the chat, if you have on your chat. We just wait for a minute and before we close this session.
Yeah, we have a question.
No
Uh,
problem.
so the question is like, what percentage of my portfolio should be exposed to particular sector, or how much of sector should I choose?
Oh, Pritesh, you take that.
Yeah. So I was actually expecting this question. I was wondering why this question hasn't come yet. A very interesting question, and most of us will have this in our minds, like what is the kind of allocation we should have into sectors. So at HappyWise, what we feel is, like we have been telling, these sectoral funds will always be cyclical. So we don't want to have more than a 5 to 8% allocation in each sector. I mean, if at all we are having. So the thematic funds can have a maximum of about 20 to 25% overall if we have all multiple themes. But individual theme, we feel you should be able to generate good kind of alpha if you enter it and exit at the right times with a 5 to 8% of allocation. Nirmal, you are on mute.
I was saying interesting analysis, Prithvish, very well said. Although one more point to add could be, see, could depend on your current status, your current
Definitely.
portfolio size, your lifestyle, your risk appetite. Many such things will come into picture, but yes, more or less what Prithvish said is what we think, correct?
Yeah, that's a very good disclaimer to make. So it should not be in some goal which is of a very short term. So if we are considering this to be a wealth creation opportunity or investment, I think that's a very good point which we have to always consider.
Perfect. Um, I think
Any
one
more
more
questions,
question.
Bharat? No?
No, sir, nothing
No,
else.
so
Okay,
Bharat has moved the
great.
slide to thank you. Right, it was great presenting this from Team HappyWise. So special thanks to Bharat for creating this and completely running this for us. And it was great presenting this on Saturday, and hope this will make a real positive effect, or a lot of learning from this and action points from this, which can be created into more and more wealth for all our listeners. So thanks for your time. Have a very good weekend. Looking forward to our next edition of the WWW, and we promise to get in more great, sort of very interesting articles which we can talk about in our next webinars, and also requesting you to let your family members, your friends, neighbors, everyone know about this initiative, and help us, spread the word and make them join this webinar as well. Thanks for all your time. Bye bye.
Yeah. Thank you. Thank you all. Bye. Happy weekend.